and welcome to The Trade. Before we get into the charts, let's have a quick look at what traders are watching. US President Trump saying he'll impose reciprocal tariffs as soon as Wednesday evening on every country that charges duties on US imports. This is a move that ratchets up fears of a widening global trade war and, of course, threatens to accelerate US inflation. Donald Trump saying both Russian President Vladimir Putin and Ukrainian President Volodymyr Zelensky have expressed a desire for peace in separate phone calls. And Trump has ordered top US officials to begin talks on ending the war in Ukraine. Oil prices down more than 2% after President Trump took that first big step towards diplomacy over the war in Ukraine, a war that has supported oil prices on concerns about global supplies. Gold prices steadying, buoyed by safe haven demand amid fears of a global trade war. And we had hotter than expected US CPI data. And the dollar jumping to a one-week high against the yen after that data showed consumer prices in the US rose more than economists expected, raising the likelihood that the Fed will hold interest rates higher for longer as it really battles to bring down price pressures. Let's get into the technicals. Jason McIntosh from Motion Trader highlighting a bullish outlook on the ASX 200 and S&P 500, emphasising purchasing during dips and navigating consolidations. He caught up with Andrew a little earlier.
Yes, look, the ASX 200, it's are we about to see a new round of all-time highs? I think this is a really interesting situation. What I want to focus on here is what's been happening since the December low. So what we've got a series of strong rallies, and then these rallies have been separated by several short but sharp sell-offs. And you can see those three arrows which I have just beneath the recent price action. The most recent selling was due to the possibility of tariffs. And before that, it was Chinese AI, and before that, it was concern about interest rates. But look at what's happened after each of the sell-offs. The dip's quickly been bought and prices have moved to new highs. And I think that's telling us a couple of really important things. So firstly, there's an element of nervousness amongst a lot of investors. It doesn't appear to be a complacent environment. And I think that's a positive thing. The other point to note is that there's an underlying interest in buying the market on pullbacks. And so I think that the dominant theme really has been about buying the dips. It's not selling the rallies, and that's bullish. I think the key structure here remains the moving averages. So I've got the 50 and the 100-day moving averages on this chart. And for most of the past year, the ASX 200 has been above those moving averages. So that's a structure that we associate with bull markets. And I think that while this condition is present, then trying to pick tops it really is a losing game. When prices are making new highs, when prices are above rising moving averages, the odds favour that there's more highs to come. I've got another chart I want to show you on the local market. Now, this is when we look at the ASX 200 on an equal weighted basis. I think this supports the bullish case that we're seeing for the ASX 200. Just looking at the latest price action, we've got a strong rally off the January low, and then the rally has paused just below the all-time high from January 2022. So that's that thin blue line you can see at the top of the chart. It goes back to Jan 22. Now, I like that the price action since the January high just over the last 2 weeks. So when we look at that price action for the last couple of weeks, prices have pulled back to consolidate the strong rally we got during January. Now, consolidations are important because what they do is they help avoid situations where a rally gets stretched and just becomes unsustainable. And so I think the current pause is a positive thing. Also looking at how the equal weight has been holding onto its gains. So strong rally in January, and then just in the last couple of weeks, it's been really just a modest give back of those gains. There's and I think that's something we want to see. We want to see markets holding onto their gains. And what that shows, it's a sign that buyers are stepping up to support it on pullbacks. Maybe we see a bit more backing and filling towards the moving averages over the next week or so. But I think overall this is setting up for a break to the top side. My view on all this is that we're in an environment to be long stocks. I think it's an environment to be actively looking for opportunities. And the sort of stocks I'm looking for, they're the ones which have either emerging or established upward momentum. And that's what I'm doing with Motion Trader. I'm looking for that momentum on the that we're getting through the price action, and I think that's where we get the best gains with the sort of risk that we can best manage. And as always, I just use those wide trailing stops. And the idea with those is we want to be able to see off these periods of consolidation when they occur, and stay with the dominant theme, which I think remains bullish.
So that's the view locally. Jason, let's refocus then what we're seeing stateside. In fact, many traders seeing more opportunity, greater upside with US stocks. How are you seeing it on the charts?
Yeah, I think this has been a really important week, probably really an important couple of weeks for the S&P 500. The bullish trend had another test last week with the threat of tariffs. We saw a swing of nearly 3.5% from the Friday high to last Monday's low. And you can see those arrows I've got on the chart. So the arrow furthest to the right is the one which marks that 3.5% swing that we saw. And once again, the dip was bought. And that's not the first time the market has come back from a seemingly bearish development. So don't forget the false break that we had on the 10th of January. That's the first arrow you can see on the chart, the first arrow on the left. So on that occasion, prices broke down from a trading range they'd been in for a couple of weeks. But that wasn't sustained. The focus then was a strong employment report and the potential of interest rate cuts being delayed. But as we saw, the breakdown was short-lived. Prices quickly rebounded. Something similar happened after the emergence of the Chinese AI advances. That's the middle arrow. And again, just overnight, with that stronger CPI coming out, market opened lower, but then closed up near its highs. So what we currently have, we have a market that's resilient to potentially bearish developments. And when a market can't sustain a sell-off, and then when selling doesn't attract further selling, it's typically a sign that the bullish theme remains dominant. And just looking at the latest price action, the S&P 500 had a strong rally off the January low, hit an all-time high, and then from that all-time high, just over the last few weeks, we've got this corrective-looking zigzag structure back to the 50-day moving average. So that's the top moving average, which I have on the chart, the other being the 100-day. I'd also add that the pullback, it's choppy, it's overlapping, again, typical of consolidations, and importantly, it's held onto most of those gains from the January low, and that's a sign of buyers stepping up to accumulate on the dips. And of course, the overriding consideration for me is that price structure. The S&P 500's got the rising 50 and 100-day moving averages. Price remains above the averages. One more chart to quickly show you from the US, it's the Nasdaq. And I think this is really interesting. It's what we see when we look at this chart of the Nasdaq. Prices are coiling up along the moving averages. You can see that blue shaded area. That's where prices hit a high several weeks back, and now we've had this narrow consolidation towards the moving averages. In my experience, when we get this type of price compression, it typically resolves to the upside. For me, it's a case of being focused on what's working, giving the prevailing trend the benefit of any doubt. And I think we can manage the risk of a reversal, which will invariably come at some point, but we can manage that risk with, I think, wide trailing stops, being able to see off the consolidations that regularly occur during these bullish trends, and then having a plan for selling when the trend ultimately does end. I think having that plan for getting out at some point, I think is a really important part of it.
Jason McIntosh there. That does it for this edition of The Trade. Be sure to join us next time.